Let's talk about something that can make or break your success as a trader, your mindset. Day trading isn't just about charts and strategies. It's also about how you handle emotions, manage stress, and stay disciplined. Whether you're just starting out or looking to sharpen your skills, understanding the psychology of trading is one of the most important steps you can take. In this video, we'll explore common psychological challenges like fear, greed, and overconfidence. You'll also learn actionable strategies to build mental resilience, control emotions, and develop the mindset of a successful trader. Let's dive in. Your mindset is the foundation of your trading success. There are two types of mindsets we'll focus on: the fixed mindset and the growth mindset. What is a fixed mindset? A fixed mindset is when you believe your abilities are set in stone. If a trade goes wrong, you might think, "I'm just bad at this," or "I'll never get it." This kind of thinking stops you from learning and improving. What is a growth mindset? A growth mindset is when you view every trade as an opportunity to learn. Instead of seeing losses as failures, you ask, "What can I take away from this experience?" This mindset helps you adapt and improve over time. Imagine entering a trade that doesn't work out. A fixed mindset focuses on the loss, while a growth mindset analyzes what went wrong, like poor timing or misjudging the market, and uses that insight to improve. Fear and greed are the most common emotions traders face, and they can lead to costly mistakes if not managed properly. Fear in trading. Fear makes you hesitate, miss opportunities, or exit trades too early. It often stems from uncertainty or lack of confidence. How to manage fear? Create a solid trading plan, start with smaller trades, and use stop-loss orders to define your maximum risk. Greed in trading. Greed tempts you to hold on to trades too long or overtrade in pursuit of unrealistic profits. How to manage greed? Set realistic profit targets, take regular breaks, and stick to your trading plan. Example: a stock hits your profit target, but greed convinces you to wait for more. By the time you sell, the price has reversed, and your gains are gone. Overconfidence can be just as dangerous as fear. Winning a few trades in a row can make you feel invincible, leading to unnecessary risks. Review your trades. Even after a winning streak, analyze your trades to identify patterns and potential mistakes. Set a daily risk limit. Limit how much you're willing to lose in a single day, even when you're feeling confident. Respect the market. Past wins don't guarantee future success. Always approach each trade with caution. Example: a trader wins 5 trades in a row and ignores their stop loss on the next trade, assuming they'll win again. The trade goes against them, erasing previous gains. The lesson: never abandon your risk management rules. Day trading is a mental game, and resilience is your greatest asset. Tough days will happen, but how you handle them determines your long-term success. Tips for building resilience. 1. Set realistic goals. Aim for consistent progress instead of trying to double your account overnight. 2. Take breaks. Stepping away from the screen prevents emotional trading and helps clear your mind. 3. Practice mindfulness. Techniques like deep breathing or meditation help you stay calm under pressure. 4. Keep a trading journal. Document your trades to learn from mistakes and track your progress. Example: a trader has a bad day and feels like quitting. Instead, they review their journal, pinpoint areas for improvement, and return the next day with a fresh mindset. A trading plan isn't just about entry and exit points. A strong plan includes strategies for managing emotions and staying consistent. What to include in your psychological plan. 1. Daily trading limits. Set rules for how many trades you'll make or how much you're willing to lose in a day. 2. Break rules. Decide when to step away, like after 3 consecutive losses. 3. Reflection time. Build time into your routine to review trades and reset your mindset. Example: a trader has a rule to stop trading after losing 5% of their account in a day. This prevents revenge trading and keeps losses manageable. Mastering the psychology of trading is one of the most valuable skills you can develop. By understanding your mindset, managing emotions, and building resilience, you'll set yourself up for long-term success. Remember, trading is a marathon, not a sprint. Stay disciplined, focus on learning, and don't let fear or greed control your decisions. With the right psychological tools and strategies, you'll be better equipped to handle the ups and downs of day trading. If you found this video helpful, don't forget to like, subscribe, and share it with others on their trading journey. Let us know in the comments how you manage your trading mindset. We'd love to hear your tips.